Hey, it's time to pay attention. Why? Well, we have FOMC on Wednesday, bond yields are ticking up again, the market expects some kind of trade deal announcement, and we still have some key earnings to get through. Volatility is most likely going to pick up on one of these events, and with the S&P and NASDAQ into key resistance, much of the market is expecting a move lower. So are we going to get that? Or could we maybe plow right through? Let's figure it out together as we look at the key charts for swing trading stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all are having a positive start to the week. Well, that has to set a record for my shortest intro to date, but it really fits the tone of the market right now. Not much has changed since Friday, and everything is fairly flat with all eyes on those aforementioned events to see how everybody's going to react. Now, before we dive in, if you do find value in the content, please like, comment, or subscribe below. It really does mean a lot to me, and it helps get this content out there to more people. And also, thanks for all the great feedback on the interview I put out there this weekend with MontBot. It seems like you guys really enjoyed that, so if you want to see more interviews like that, let me know. I do have a few connections in the crypto industry, and I know some other traders, so I think we can keep that going. Now, given the week we have ahead of us, I want to take a moment to focus on a mantra I've said here before, which is have patience, react, don't predict. That's absolutely true for a week like we have ahead of us, moving into a period where there's overwhelming bearish sentiment out there and everybody's thinking we're going to get a pullback. Now, as a quick aside, I wouldn't put it past the market to push past 5,800 on the S&P just to shake out shorts before correcting later. So I'm bringing this up not just because of where we're at in markets, but because I had someone ask about predicting over the weekend. They said, hey, isn't what you're doing by laying out your thesis for the market predicting? And no, that's laying out an idea of what I think is going to happen so I can build my trading plan accordingly. What I mean by have patience, react, don't predict is don't go short heavily right now into resistance. See what the market actually does and then react to that. Yes, you might miss a couple of percent, but you have a much safer entry when you're moving with the trend and how the overall market reacts. And having a thesis is ever so important because if you don't have that and you don't have a plan, you can't take quick action when the market does finally move. I formulate a thesis of probable outcomes and then I build a plan for each scenario. And without that, I wouldn't be able to act quickly when things actually do change. So just to sharpen up that concept for you guys so you can see how I'm thinking about the week ahead, I've been thinking that since markets have been rallying on the talk of trade deals being worked out, I could see this being a buy the rumor and sell the news style event where the actual trade deal disappoints and causes a sell-off. Also, no rate cuts are expected on Wednesday, but if we have an overly hawkish tone from Jerome Powell, that could also spur on a correction. The last thing I would say is that given the run we've had over the last 10 days, that just stacks the odds in favor of a correction being more probable because you can't run up in a straight line forever. Eventually, you need to find that equilibrium in the market. Now that said, with everybody leaning so bearish, it's really making me also consider the other side. I'm keeping my mind open to the market perhaps pushing through aggressively on more favorable news from either of those big events. The other thing that is getting me to think a bit more contrarian is that demand for US Treasuries globally is collapsing, and the 10-year and 30-year both almost hit levels today where the powers that be normally step in to juice markets. As I said on Friday, bond yields are really in the driver's seat right now, and we have to pay attention to that. So set your plans for either event. Personally, I have my key position set should we just continue to rally, and I also have cash and my limit orders ready to go should we see a dip. Okay, so to help us better plan for the week ahead, let's start with some key earnings coming up. This pretty little chart is from earningswatcher.com. If you do want to sign up and trade a lot of options, they have some great info on that site. It is $40 a month, but again, if you're trading a lot of options and you're looking at earnings and need to get more info on these companies, it's a great resource. Anyway, today we had Palantir and Ford, who both disappointed, and I think we could have predicted this pullback in Palantir just by looking at the chart on Friday. We said that we were into key resistance with that top level of 125, and that pullback was probable. Well, we saw that today as we pulled back about 10% after hours. The stock, while it has a lot of great momentum, is very richly valued at a PE of 650, so they needed to give very strong forward guidance for the market to keep up with that valuation, and I think the market was just a little disappointed. But beyond that, we had Ford, who couldn't offer any forward guidance because of a $2.5 billion impact of tariffs that they don't know how it's going to shake out. So there's uncertainty in the market from both these stocks, and I suspect we may see that carry forward a bit in the week ahead. So next we have Celsius on Tuesday, and they're announcing before the market opens, so I'll be up bright and early to check that out. Then we have AMD on Tuesday as well, and then Uber on Wednesday, and those are the main ones I'm watching for the week ahead. Okay, getting into Forex Factory, the main thing this week is the FOMC meeting on Wednesday, and the real important thing is the press conference afterwards. The market is expecting no change in the federal funds rate, but whatever Jerome Powell comes out with, that will be all important. And on Thursday, we have a little bit of unemployment claims data, which may move the market a little bit, but this is the one I thought was funny. Look at every FOMC member coming out on Friday to spin the narrative. The plunge protection team is out in full force, so I imagine that would be something to watch out for as well. Okay, I think that's everything, and we can dive into the charts. I did have one question come up on the 50% tool and how I use that, so I'll go over that first in TradingView, and I'm also going to look at the Cantor Equity Partners chart because someone asked about that this morning, so I figure we can do the analysis on that and do a demo on the 50% tool all at once. And I'm gonna do more of a study on the 50% tool as we go through the charts to show you just how powerful it is on things like Bitcoin and Tesla and a few others. Also, I had another request come in to talk more about the IA indicators, the Invest Answers indicators, and the buy and the sell signals. So what I'm going to do is on some of the charts, I'll look at the buy and sell signals I'm getting from those indicators, mean reversion, and then how I'm marrying that with TA just to kind of round this out for you guys so you can see how to use those things in concert. Anyway, let's go over to TradingView. We have Cantor Equity Partners, and an explosive breakout like this is not something I normally chase, but they are building a bit of a treasury akin to MicroStrategy, so it is an interesting one. The thing with analyzing this from a TA perspective is that there's no historical trading data in this range, so it's really hard to build a thesis of where support and resistance could come in outside of maybe this little zone right here. But to help me, I will also bring up the 50% tool. So what I use for that, just right here, the third option down on the left on TradingView, I will go to the fib retracement tool. And if you bring this up for the first time, it'll have probably about 8 different lines on it for you. What I do is I go into the settings and I turn off all the levels except for 0, 50%, and 100% because those are the most important levels for me in my trading on the fib retracement tool. And then you can change the background colors, and I just like to go with the green and red to let me know that, hey, things are strong in the upper half and weak in the lower half. So if I go back to that tool, and we just draw it from the very top of this move at just under $60, and then we go down to where we broke out here, that would put the 50% right here at $35 and change. So anything above 35 I would consider stronger, and I would have loved to see this daily candle close in the stronger half of the range. It's okay for it to dip down, but the fact that we close down here is showing me a bit of weakness. Now we are into this key support, and if we consolidate under here and can't push through, that would be a signal to me that we're not finding strength in this chart. And then I would look to the downside. And since there's not much support, I would be looking to this gap fill here as the next logical place of support at $17.95, so $18. So quite a bit of a drop from where we are right now. We were about 32 after hours. So this has to do some work. If it can get back above and consolidate above this 50%, I would feel much better about this. I wouldn't expect volatility to come out of a stock like this though. When things have explosive moves like this and a ton of volatility in either direction, I mean, just measuring the drop today was down as much as 34%. So I would not expect the volatility to come out of this. This can be a great trading vehicle if you're day trading when there's this kind of volatility, but it can also be risky. So set your levels. If this consolidates above 50% and you believe in this and you want to see where it can go, maybe you want to build a little position. If it can't get above that 50%, perhaps you want to set your entry down here at, and maybe you front run this at like $18, right? And then you could build a position at a much better cost basis and then see where it goes once they actually build their treasury. Okay, so let's start with the usual suspects, the S&P 500. And we've been saying we're into key resistance here. This teal line is the 50-week moving average, which we bounced off today. We rallied back into it and then kind of closed the day near where we opened. And then we have the 200-day moving average. So a ton of resistance there. Again, we talked about on Friday the concept of folks who are older investors or who just don't want to live through the volatility. We're getting near 5,800 near this rally where they maybe didn't exit. So it does make sense that there would be a lot of natural selling pressure here. And that's not even accounting for the aforementioned volatile events that could shake up the market this week. So if you're taking those two things together, it makes sense why folks are projecting a potential rejection from here. So if we do reject, where could we pull back to? Well, we have two dotted lines with a gap fill right here at 55.80, and then this one way down here at 5,300. This is too small of a move for a meaningful correction. I would put this as my target. And if we're going to really be strong and flip this resistance line into new support, perhaps we target it on or after May 9th here, so we can back test this line for support and then bounce away from there. So what that would look like for me is perhaps we chop around a little bit, maybe we even tag this, and then by the 9th we could drop down here, or after the 9th, and then we could bounce away like this. And a lot of folks are comparing this market to 1998, where we had a dramatic drop and then we had a pullback and recovered from there, and then we continued to rally into the dot-com crash. So I just flipped over to the weekly and I went way back in time. And as you can see here, at the end of 1998 into 1999, we had that big crash, rally up into the 200 MA, the 50-week. Then we rejected again. We actually set a slightly lower low, which, as we've been saying, is not uncommon for markets. And then we bounced away from there. So that was 5 weeks later. And then from there, we still ran away for 98 weeks. So almost 2 years of a rally before we finally had that eventual correction. So if we're going back to modern times on the weekly, we are into that 4th week. So maybe this week or maybe next week, the 5th week, if we match that thesis, we would drop down, set a lower low, and then rally away from there. But again, history doesn't always repeat, but a lot of these chart patterns, they are similar. So, oh God, I hate using these cliche terms. Doesn't always repeat, but it rhymes, but it kind of is true. So we'll just go with it. Anyway, the NASDAQ, as you can see, is quite similar, but the gap fill on the NASDAQ isn't quite as far down, and we've already passed that trend line. So we're not even worried about backtesting that trend line right now. We are just thinking about this gap fill here at 18,414 maybe being tested. So moving over briefly to the HSI, you can see percentage-wise, it's rallied more than the S&P 500 than the NASDAQ. There was a gap fill here that had already closed. We're above the 200-day moving average. So all in all, this market is a bit stronger. Okay, moving over to gold really quickly, and we did see gold rally today, bouncing away from that 3,200 support zone where we found support at the end of last week. And again, I think this is tied to uncertainty with bond yields ticking up and foreign governments dumping US treasuries. So when there's uncertainty in markets, like we reviewed on Friday, people rush to a defensive play like gold. Is there a chance we still go up to this $3,600 target? Possibly, but this really looks like a topping candle to me. And again, the more probable thing for me would be for us to just kind of tighten up in this range and find some equilibrium on gold until it figures out what it wants to do. Okay, looking at oil really quickly, it just can't catch a bid. It broke down on some OPEC news over the weekend. If we look at the 4-hour, some folks were saying that, oh, maybe there's an inverse head and shoulders here. Then we're finding a bottom and targeting somewhere up here. But as we know with commodities, they're driven by geopolitics and the news cycle. And so that did not play out. And I suspect this might be a move for leverage or negotiations, because we talked a few weeks ago about the average cost of production being about this $60 range for US producers. So if we're under that price, it's not profitable for them to drill, and it's putting a lot of pressure on the US. If we go over really quickly to natural gas, which I talked about on Friday, the short that I entered, because we had this head and shoulders at the top, and then we dropped down, and we came back to test this neckline. The target for the head and shoulders is still way down here. So I entered a short on Friday with a stop loss actually right about here. And I was nervous overnight because the price rallied beyond my stop order, but it didn't execute because those orders don't take place until the market opened. And then natural gas corrected and put in a pretty darn solid corrective candle today. So my trade here is up, and it's in a little safer territory, but I'm going to keep watching this for a breakdown over the next couple of days. Okay, bringing in the Invest Answers tools just to do a bit of analysis here. If I was only analyzing this on the daily, I would not have entered a position here, because on the daily, this is still way oversold. RSI broke this downtrend and looks like momentum is shifting positive. So we think the overall trend in the long term may be upward on natural gas. But what does that mean for the short term right now? Because you can't always see that on the daily. And remember that these tools are optimized for the 4-hour. So if I zoom into the 4-hour, I see that mean reversion is spiked on the 4-hour above 2. Also, RSI is way overbought up here. And then today we got a sell signal and we're just about to have a trend flip here. Now, I did front run this a little bit just because I noticed that this spike on mean reversion on Friday and this RSI spike were unusual. They were higher than normal. So that was telling me that a turnaround was imminent. So I front ran this move. If I get this trend flip this week and we continue down, I would actually add to my position. And these indicators just confirmed my TA thesis that even though I wasn't seeing it on the daily with these indicators, on the 4 hour, it's telling me that this is a good probability for an entry. And we're just looking for a move over the next few weeks here to hit these targets. If we go back out to the daily, I just want to talk about my strategy for this trade because I think it could be helpful for some of you to see how I'm thinking about these shorter term trades. Now, I entered here, the head and shoulders, you can see my line here. Here's the eventual target at $2.61. But I've seen that we get a ton of support here at $2.98. You can see all these bounces, and this has just been really strong support. So if we drop down here in the downtrend, I would take off at least 25% of my position, which by this point would cover my entire entry fee in the event we get a bounce. Maybe I'll even take off 50% if I'm not being greedy. And then if it continues running to the eventual target, great, that's amazing. So here would be a 20% move, here would be a 30% move, and that's on spot natural gas. So I'm with a leverage fund, so I'm happy taking some profits here, get some off the table, get risk-free in the trade. And then if you leave a little runner to get a little extra juice out of it, that's amazing. You get a little more juice out of that trade. So moving on to Bitcoin here on the daily, and there's not too much to update from Friday. We did pull back a little bit, but we're still forming this bit of a bull flag. We have very strong support here at 91.5 to 92. I suspect with the market figuring out what it wants to do, this is just giving Bitcoin a chance to cool off and build steam for that next move up. And I would actually love to see a correction to build structure. Maybe we intersect with the 200 moving average here and flip that into support. Okay, going here to a blank chart of Bitcoin. And I just thought it would be fun to do a bit of a study on the 50% tool and how you can use that in your trading without any other TA or indicators on here. So if I just draw it from the bottom of our correction to the top, where does that support come in? It comes in here at $86,000. And there's nothing special about 86,100, but you can see how that 50% lines up with these tops where we were finding resistance. And if you get more advanced with these tools, you can actually use fib extension tools from a correction area or perhaps this correction top to project out where a move could go to. But that's definitely something for another lesson. So if I bring up the fib retracement tool one more time and I just focus on this last little move right here. So I'm going to take this last swing bottom and just focus on this move. And where does that happen to be? That happens to be right at $91,000. And we've been saying that between $91,000 to $92,000 is very strong support. So if we zoom out a little bit more, just to find confluence here, what if we take this whole corrective move and measure that out with the 50% tool? So we'll go to our tops here and we're getting a lot of lines on here now. And we just measure that out. So, and you can see how that 50% level just gave us support, 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 support this whole time. And then when we broke down from it, we got into the bigger part of our correction. And now we really would like to ideally hold in the top half of that 50% from the overall move, which happens to be at $92,000. So maybe we wick below and we find support at that magical 91.5 that we have drawn on. But this can just start to give you confluence of areas to expect support and resistance without using any indicators, without using the VRVP tool. Just using the 50% level is very, very powerful in your trading. If we go over to Solana, and I really should just make a clean Solana chart so you guys don't have to deal with all my lines and crap on here, but the analysis is a bit the same for Solana. Any pullback down to those low 30s, maybe mid 20s could be healthy. And then we're still targeting that $180 that we've been saying from this inverse head and shoulders. But again, with the 50% tool, just taking the top right here and measuring down to the bottom, where does that come in? Oh my gosh, the 50% is right on this line of the most traded range. It sits right on top of all this historical support that we have drawn in for Solana, or that I have drawn in for Solana on the chart. And it also lands right at that $126, which we don't want to break below to maintain structure from that. Ideally, I would love to see this like $134 range or these tops right here hold without correcting down there, because that would be a bit stronger. But the point is just that the 50% tool just by itself can be a very powerful tool to give you a lead on the market and your TA. Okay, moving over to MicroStrategy. And this is one where we were saying that this move is just extended by the number of days it's run up. Let me turn off the VRVP. So we were expecting some kind of correction to come in because things don't move up in a straight line. And this was unprecedented for the number of days it had moved up in one row. We also had this previous top here. And even if we didn't find resistance at that psychological $400 level, we would have a lot more resistance overhead at like that 450 range. But this was already overextended. I'm seeing that with my traditional TA and RSI coming to the top. And how am I marrying that with the Invest Answers tools? So when I bring this in, you can see our mean reversion here is just over those 2 standard deviations overbought. And if we zoom into the chart, you can see we're getting all these sell signals and the trend is just about to flip. So this sell signal, mean reversion, RSI, the number of days it's run up, they're all working together to tell me that this move needs to cool off a little bit. We're also talking about the broader market correcting, Bitcoin correcting maybe to 91.5K. So this would all point to this correction in MicroStrategy. And we haven't seen that trend flip yet. Because of this mean reversion spike, I did sell some covered calls at the end of last week, given that we're in a bull run and it's not a blow off top like we had in November, which was the last time I sold covered calls on MicroStrategy. It doesn't feel as safe, but if we see a little dip and pull back here, I'll probably buy those back before they expire. Okay, SMH and the semiconductors, they're just grinding up slowly. There's not too much to report there. So I'm just going to move over to Tesla real quick. And here we are also on the daily. Not much has changed since Friday, but I just drew in this new zone here between 270 and 295. And we are really compressing and coiling in this zone right underneath the 200-day moving average. So this is telling me that something's got to give here soon, one way or the other. And it's nice to see this coiling in the upper part of the range. You could argue that this is starting to form some kind of bull flag, but we do have that big resistance overhead, and I really want to see us break that 315 to be confident that, hey, we're off to the races on Tesla. On the daily too, we did have this buy signal back here on IADSS. Our mean reversion was severely oversold. It wasn't at that 2 standard deviations, but remember on the daily, things don't always drop down as much. So anything over 1 on Bitcoin and Tesla for me on the daily chart is something to pay attention to. So I'm looking at that. And if we go into the 4-hour, we have that same buy signal here. But the thing I'm looking at on the 4-hour is just that these bands are starting to compress. Much like Bollinger Bands, these act in the same way where when things compress, that's an indication that there's going to be a volatile move incoming. We can still compress for a couple of weeks here and get tighter and tighter. The unfortunate thing is compressing bands don't tell you which way that move is going to break. They just let you know to pay attention that some kind of move is incoming soon. Okay, speaking of coiling, look at my transitions here. Hood is doing the same thing. So we had earnings and we are just in this very tight range. Let me draw a little box for us here. So we've got our range right here that we're coiling in. We had this inverse head and shoulders, and we have our target drawn here for that $62 on Hood. So this is one I'm just watching right now. I bought a little bit more on the dip after earnings. It seems to be finding strong support at that mid $40 level. And we are just going to have to wait to see how this one breaks as well. On the daily RSI, we still have room to run. We did get this little sell signal here on mean reversion, but it's not something I'm really paying attention to because you see on the daily how the mean reversion can spike far beyond that on Hood. So another one that's coiling, just bringing up Celsius because we have that earnings call tomorrow. We did just break below this little support line here. I mean, granted, we've dipped down below it before, but we also broke into the center cloud here, which has me concerned a little bit because generally on the daily time frame, when you have a big up move, I would love to see a bounce away from this and have us continue in this outer cloud. Generally, when you start breaking into this center cloud, you can anticipate more consolidation and drawn out sideways chop. So if earnings tomorrow is a non-event or disappoints, maybe we pull back and we chop around in here. Or maybe this was just a fake out with some people fear selling into earnings and then we bounce away from here. But we also had a sell signal back here. Mean reversion really wasn't floored that much, but we did have the trend flip. So I'm just paying attention. This isn't something I would act on to sell necessarily, but I'm watching this closely, and I think earnings tomorrow are going to give us a good signal of where this is going to go. My entry is right around here in like the $23.50 range. So I do thankfully have a very good entry on this. But if we do start to drop down more, I would maybe lighten that up a little bit and look for another entry lower down. But in an ideal world, zooming out, I would love to see us break this resistance. And you remember on Friday, we drew the 50% tool. And wouldn't you know it, the first targets we were talking about here, if we break out with that $60 range and this consolidation, 50% hit right on those peaks. So again, coming back to this, just seeing how powerful this can be in trading to give you targets and to measure out moves. So let's see what this one does tomorrow. Okay, going back to Deckers real quick, because we haven't talked about it in a while. It had this kind of ugly inverse head and shoulders, and I didn't know whether to trust it or if it was going to play out, but our target is here, like around the high 130 range, and we do seem to be breaking away from that. On the 4 hour, our mean reversion is spiked quite high already. If we go into the daily to look at it there, we'll just zoom out. You can see on the daily, RSI still has a lot of room to run. Mean reversion has a lot of room to run. I wouldn't expect this to get back to all-time highs around 220 anytime soon. But what I'm targeting again for this is I've been building a position on these lows, and I just wanted to capture that little move back up. I mean, if this really rallies, maybe we intersect the 200 MA somewhere around here, around 150. But I'm not going to hold on to it long-term for that bigger move. I'm just going to capture a little bit of a gain and then get out of this and rotate this to a faster horse. So just quickly, I wanted to pull up as one last one for fun that we haven't looked at before, Netflix. And this is not one I would chase, but I just wanted to pull it up because it has been bucking the trend and running stronger than the rest of the market, up 41% since early April. And yesterday with Trump announcing tariffs on foreign shot cinema, I just wanted to look at this one to see, hey, could that be a catalyst to maybe bring this one down from its heights? And clearly we had a reversal candle today. You're starting to see a sell signal flash here. We've got a lot of way to go in the trend before it flips that, but you can see that mean reversion, even though it hasn't flashed a sell signal yet, is fairly elevated for Netflix. RSI is elevated. So this is one that I would definitely approach with caution, and that could potentially see a correction after this big run up. If we go into the 4 hour, you can see how we broke back into the cloud. The center channel did provide some support. We had a full sell signal here. Trend hasn't flipped yet, but it's much closer to flipping on the 4 hour. And you can see how these mean reversion spikes are already starting to go down. So anyway, keep your eyes on Netflix. If it's something you want to get into and you're looking for an entry, I would maybe look down here around that $1,000 psychological level. This is actually at $995. As we get into this volume cluster and these previous peaks, that's where I would anticipate support coming in the near term if you want to look for an entry. Again, this is not something I'm playing because I'm looking for stocks that can grow by several multiples over the next couple of years, and I don't think that is going to be the case that Netflix gets to $3,000 or $4,000. So that's it for the charts and everything we're looking out for the week ahead. I'm sure it's going to be an eventful few days, and we'll have plenty to discuss on Friday in the weekly wrap-up. Looking forward to seeing you then. Bye for now.